And with that, we'll go ahead and start our 2022 update for FIRPTA, the Foreign Investment in Real Property Tax Act. A while back, I did a presentation all by my lonesome about FIRPTA. And this time around, I thought that I would bring in some experts here. So here's me, obviously, but I'm bringing in today Tracy Barnett. She's one of the tax managers here at the Wolf Group. Tracy is an attorney that's a member of the Illinois Bar. Tracy's worked for us for quite some time and has regularly handled FIRPTA issues for many of our clients. She's also had the luxury of actually talking to a lot of the people in the IRS FIRPTA unit, which is kind of like finding Waldo. So definitely some great experience there from Tracy. And also we have David Roche from KVS Title. He's an attorney with them, member of the Maryland State Bar. He's got 21 years of experience in the field, and he also has a lot of experience with FIRPTA cases. I'm sure he's worked more cases than he's probably claiming here, 10 to 15,000 settlements. But the experience and the background they have in this area is very well noted, and we really appreciate them being here today to present with myself. Here's our disclaimer for the presentation. So what we're going to do is we're first going to go through a little bit of background and context. I'm going to go through this kind of quickly because in the last webinar, which is on our YouTube channel, if you want to check that out, I really went through it more methodically and detailed. So there's no reason to really redo that again. But then we're going to go into a little bit about KVS Title, and then we're going to end. We thought we'd kind of end the presentation with a series of hypotheticals that are some common things that we see that we would like to talk about. And then last but not least, we're going to end with questions, and happy to address all the questions that may come up. Okay, so starting with a little bit of context and background here. So FIRPTA was passed in 1980 by Jimmy Carter's administration. It was in response to in the 1970s, the late 1970s, we saw a lot of foreign investors that were purchasing real property inside the United States and not paying tax when they sold the real property. Their argument was, under current law, it's not effectively connected income. Therefore, I'm a non-resident. I don't have to pay tax on it. And so very quickly, there was this disparity between a non-resident who would buy and sell homes and not have any tax and a U.S. person who had to do that. So in order to rectify that imbalance, FIRPTA was created so that, the sale of U.S. real property became effectively connected income. And then obviously to safeguard the tax on that, the withholding tax was set at 10% under the FIRPTA regime. One thing to note, and we will talk more about this, is that if you read closely Internal Revenue Code 1445, the buyer is actually responsible for the withholding tax, not the seller. So the seller is always worried about the responsibility of the withholding tax, but really it comes down to the buyer's responsibility with the IRS. The Obama administration, one of the things they did in the PATH Act here is they increased the withholding tax rate from 10% to 15%, which I believe kicked in February of 2016. So the PATH Act was passed at the end of 2015, and then the change from 10% to 15%, which I think a lot of people still remember, kicked in February of 2016. So the way it works in regards to the 15% and 10%, and so I kind of, on the right-hand side, you see the law, and on the left-hand side, you kind of see the interpretation there. But generally speaking, if you have real property that exceeds $1 million, they're going to want to withhold at 15% of the sales price. If it's less than $1 million, then it's 10% of the sales price. And if it's less than $300,000, then it's 0. In order, though, to get into the 10% or the 0%, you do have to make sure that bullet number 1 on the left-hand side, that the buyer is an actual real person. So it can't be like a company or a partnership or a corporation. And then the buyer has to agree, has to basically say, hey, look, and maybe David can talk to us more about this, but hey, I'm going to live in the property for 50% of the time for the next 2 years. That's kind of the buyer's affidavit that they have to do. And then that allows the seller's withholding part to drop to 10% or less under the reduced withholding rates. So again, there's that exemption of withholding tax, which is the 0% for a sales price less than $300,000. A lot of people always ask me, where do I find that at in the tax code? Well, you can find that at under 1445B5. that's where it says that. And it also says that in the Internal Revenue Manual as well. So if people are looking for citations to that, that's where you would find that language. And so again, just to reiterate, on the left-hand side, we talk about, the general rules of thumb with the withholding tax amounts, and then the timeline in which withholding tax must be sent down to the IRS. Typically, it's 20 days after closing, and it's sent down with forms 8288 and 8288A, which we'll talk about more here in a minute. This is a nifty chart that I found. We won't really be talking about LLCs or corporations or partnerships or trusts in this presentation, but this basic chart has a starting point for pretty much anyone that could be subject to FIRPTA. And it walks you through kind of the tree chart of, okay, if you're an individual, if you're a US citizen, does FIRPTA apply? No. If you're not a US citizen, then are you a green card holder? And it kind of walks you all the way on down. And it creates a great flow chart in thinking if you're in one of these situations and you think you may be subject to FIRPTA. To get more into the individual part of it, though, this second tree chart is just for individuals. So again, it's the start that you have a seller that's a foreign person, and now you're walking through, okay, is the 15% required? Is the 10% required? All the way on down. So I'm not going to go through that because I don't want to waste a bunch of time on that. The slides will be available to everybody, but it is kind of a handy reference chart that you can refer back to for future purposes. Okay, the various forms that are in play here when you talk about FIRPTA are generally going to be the form 8288, the 8288A, and the 8288B. Now, in our world, we call that the A form and the B form, so sometimes we'll shorthand it. But generally, we're referencing the 8288A when we're saying the A form, and the 8288B when we're saying the B form. However, if you are going to be sending down withholding tax to the Internal Revenue Service, you do have to complete, in addition to the 8288A, form 8288, which is kind of like the master form, and then the 8288A is going to be attached to that. Part 1 is going to be for individuals, and then part 2 is going to be for entities. And this is kind of what the IRS does when they mark up the form when they receive it. They're going to, put all sorts of notations on there. As Tracy is going to talk about here in a little bit, the IRS does everything by hand and manually when it comes to these forms. Nothing is really done inside a computer. So this is literally what it may look like when it gets to the hands of the IRS and the notations that they're doing. This is the 8288A. And we'll talk more about this one a little bit later, but this is an area that I spend a lot of time with my clients on because we want to verify some of the information which I've highlighted in yellow here before it gets sent down. A lot of times I like to make sure, hey, is the name correct? I've seen so many times where people have just given me a form like, hey, your name's wrong. What did you not know your name was wrong on the form? You should double check that. Or there's no identification number when the person had an identification number. I mean, that's a major boo-boo right there. You can't do that. So it's really important to check all this because the IRS has to match it to the taxpayer's master file in order to credit the money. Otherwise, it could go into some black box somewhere, and then it can take years to track it down and find it. So this is a simple thing to do. It doesn't take a lot of time to review these forms if you need to before they go down, but it can pay dividends in the long term, especially with the state of the IRS and given that they're so backlogged and so far behind and have so many errors. This is an example of what an 8288A would look like when it's completed. Again, the date of transfer, if there's any tax withheld, it's going to kind of state that. The amount realized is generally going to be the sales price, the name of the person, their identification number, their foreign address if they have one, which we'll talk about, and their mailing address if it's different than the withholding address. This is the B form, or just a snip of what the B form looks like. I think each and every part of this form, I've looked at it many, many times when I've helped clients complete this. And I will tell you right now that the B form, it still trips me up to this day. There are still times where I'm looking at the B form, I'm like, how do I answer that specific question, or how do I fill out that specific part? So it's not a very intuitive form, and I would really take your time to look through that if you're going to complete it. Okay, let's talk about the impact. I want to give some context too to the impact of what COVID-19 has had on the IRS. So for those of you that don't know, the IRS shut down for about 8 months in 2020, basically from mid-March to it was some parts of the IRS opened up in August, some in September, some in October, some in November. But during that time period, what happens is that nothing really got sorted or processed. And that led to massive backlogs that we're still dealing with to this day. For those that have seen me in other webinars, the backlog reached a height of 35 million unopened tax returns in the middle of 2021. When we got done with tax season here just recently for the 2021 tax return in October of 2022, the backlog was still about 6 million parcels. And just recently, here's a snip that I took from a letter that was sent on December 6th to the IRS. It's from a group of what we call enrolled agents, which are tax practitioners. And basically they're talking about, look at this second one. It took me 35 calls today to get into the hold line for the IRS. 35 calls. I mean, can you imagine that? This first one, I got on the phone at exactly 7 a.m. when they first opened, and I still couldn't get through. And basically, if you look at the people that are getting through to the IRS at the beginning of the pandemic, it dropped down to about 10% of all calls got through. So 90% of all callers didn't even get through. 10% got through. Then we fast forward to 2022. At the beginning of the year, it dropped to 6%. Now we're here in December of 2022, and it's like zero. No one is getting through. I think Tracy talked to me this morning, and she's like, "Hey, I got through, just so you know." Like, we were celebrating the fact that she actually just got through to talk to the IRS. Yes. Tracy, do you want to comment on that?
Yes, it was, I told the IRS agent and I actually had a really short hold time. And I said to him, I'm not prepared, because I was expecting to have an hour-long wait time. It was shocking. And I can completely relate to, this one right here that says it takes twice as long to get hung up on by the IRS because they have this, verbal authentication. I mean, it's really, really frustrating. I can completely relate.
Yeah, so the moral of the story there is that it's difficult to get through to the IRS in general. And I think when it comes to FIRPTA, it was super difficult to get through to them to begin with, even before the pandemic. Now it's virtually impossible to get through to them. They're a very specialized unit, and they have a very set schedule when they do this stuff. So it's hard to know what's happening in there and kind of what the status is for a lot of this stuff. Also, from my experience, it's hit or miss on the timeline of when things go through. I think we had 4 or 5 people do the 8288B last year around March, and one of them got their response and their reduced withholding certificate in, I think it was October or September. And all 4 were roughly about the same kind of circumstances and facts. The other 3 have still yet to hear anything, and it's confounding. It's like, why, they all look the same. It's the same kind of iteration. Why does one get through but the other 3 don't? So maybe David or Tracy will have some comments on that later. But that's kind of what we're dealing with here today with the IRS. So that's my general context. I hope that was helpful to set up this next discussion. I'm going to hand it over to David and let him talk about KDS and their process, which I think it's super interesting to hear from a settlement agent, kind of the way they see it on their end, instead of just hearing it from how we see it on our end from the tax perspective. So without further ado, David.
Thank you, Michigan. Hello, everybody. As Michigan said, I'm Dave Roach. I'm with KBS Title, a title company in Maryland, Virginia, DC. And we deal with a lot of FIRPTA. It's one of my favorite things to do on a daily basis. So let's talk about that a little bit. What I'm going to give you here is just sort of a brief summary of what we do. Intro to the settlement attorney, our process, define rules of the parties when FIRPTA is involved. When the settlement attorney gets involved in the transaction, and a couple of very specific roles that differentiate when we get involved in the transaction. How do we know that FIRPTA applies to the transaction? And when FIRPTA does apply, what are the next steps? What do we do? And then lastly, I'll just touch on a couple of pitfalls that might apply or come into play from time to time. All right. So as far as a title company goes, a settlement agent, settlement attorney, all interchangeable, whether you say settlement agent, settlement attorney, title company, settlement company, all the same thing. For purposes of this, we'll try to stick to settlement attorney. So when a settlement attorney gets involved, we're looking at what our obligations are to the transaction. Okay. So we're gonna see, first of all, I should also mention what we really do is we're the facilitator of the entire real estate transaction. So when FIRPTA is involved, we're also sort of the facilitator of the FIRPTA transaction and all the parties involved there. And the reason that is our obligation is to make sure any funds that need to be withheld are actually withheld and dispersed appropriately. If there's any exceptions to FIRPTA, for instance, Michigan mentioned the 300,000 plus, rare, but if you're selling a property for under 300,000, you meet that criteria, FIRPTA wouldn't apply. So we'll look to see if there's an exception to FIRPTA. Usually there's not. G4 visa comes across the table, we're going to say, okay, FIRPTA most likely does apply. So once it's determined, once that determination is made, we're going to fulfill our obligation to withhold, and that's the 10 to 15% of the amount realized or sales price, which is usually the same thing. So the importance of the settlement company is we're doing a couple of things. One, we're either holding the funds in escrow until a withholding certificate is provided, or we're dispersing the funds after settlement. And I should say we're remitting the funds to the IRS after settlement. So that's an integral role. Obviously, funds are going to be held up until that process plays out. As far as the defined roles of the parties, what we're looking at is the transferor, who's the seller, transferee, who's the buyer, and also the withholding agent. Buyer is the withholding agent. Buyer, as Michigan mentioned, is responsible for withholding at the end of the day. When we get involved in the transaction, we are involved at one of 2 points. We're either going to be contacted way ahead of settlement. For example, a listing agent may reach out to me 4 months before an actual settlement occurs, before the property is even listed, and say, hey, I have a G4 visa as my client who's trying to sell this property. What's the process? What are we going to go through? So we'll talk them through that. We'll decide, okay, here are your options. What should you do next? Disclosure, make sure you disclose to the buyer that the property is being sold, which is really important because a lot of times when it gets to us, as far as the title company or settlement attorney goes, we are sometimes telling the parties that, hey, by the way, from what we can tell here, FIRPTA applies. It's really important that both the seller knows that and also the buyer is informed of that. It cuts down on any sort of tension at the time of settlement or as settlement gets closer. So that's what we'll do. We'll talk to the listing agent prior to settlement if they reach out to us, or if you're a student enough with G4 visas, often just give me a call several months before closing actually takes place and say, I've had the conversation just the other day where a gentleman called me and said, hey, I am a G4 visa. I'm looking to sell my property. Am I going to be subject to FIRPTA? I'm reading about this really obscure law, and I want to make sure I follow the appropriate process. So we could get involved at that point. Traditionally, a title company or settlement attorney will get involved once the contract's been ratified. And then that's where our process takes off. So once the contract actually is ratified, a typical settlement attorney is going to go through a process of determining whether FIRPTA applies at that point. Either, again, we'll be told that FIRPTA applies from the listing agent, from the seller themselves. It might actually be in the contract, depending on where your property is. In Virginia, the NBR contract is actually really good when it comes to FIRPTA, because under paragraph 14, there's a little box you check off that says, yes, FIRPTA applies, or no, it doesn't. However, contracts in Maryland and DC don't have that little box. FIRPTA is actually written into the contract, but there's no specific indication whether it's applicable or not. So we have to determine that. A good settlement agent is going to have a process in doing that. So what we do is we look to a couple of things. We look to our little settlement checklist that we'll have sent out and have every seller fill out that says, here's my address, here's my name, here's my social security number or tax identification number. I am not a citizen, or I am a citizen. And that's the little section right there. It's very important that we'll look to determine whether or not FIRPTA is going to apply if we haven't already been given that information. Another way we'll actually do that is obtaining a copy of that visa, G4 visa or otherwise. And obviously for this discussion today, we're focusing on G4s, but I think it's important to point out that FIRPTA applies to anyone who's a non-US citizen, or most people who are non-US citizens. So you can have you can be a permanent resident, have that expire, move back to the country of origin, wherever that may be, and still own property in the US, and that would also be subject to FIRPTA. But for the purposes of today, we're obviously focusing on G4 visas. So once we know FIRPTA applies, next steps, going back to what we said before, we're going to have to withhold. We're going to take that 10 to 15%. We're going to determine whether it's 10 or 15%. And we're going to let all the parties know this is what has to happen. Get everybody on the same page, get all the necessary information from the buyer, which is the social security numbers, forwarding addresses from the seller, where are they going to be after closing, making sure that we have correct TINs and social security numbers. All of that, a good settlement company is going to look at all of that, confirm it with the parties, just to make sure there's no discrepancies, no issues post-closing. Then we're going to give the seller, you guys, the option A or option B. That's the A288, well, Michigan reference as A or B. So you can either have us, a settlement company, escrow the funds, and we'll hold them in escrow until a withholding certificate's provided, or after closing within 20 days of the actual settlement, we'll remit the funds to the IRS. Under that particular example, the settlement attorney, KVS, will always fill out the 8288 and 8288A forms. And those forms, along with the funds themselves, are remitted to the IRS under that A example. It's important under those circumstances to have a good settlement company, because you gotta know how to fill out these forms. And as it's already been pointed out, there's very specific parts that have to be 100% correct. If there's any discrepancy whatsoever, it can be an issue. So you have to make sure you have a good settlement company that's going to handle that part for you. So there's a few pitfalls that you can look at when it comes to the whole settlement process from our end. Well, there's a lot of pitfalls really, but I'll touch on a couple that kind of come into play here, or most often. One, as an example, Michigan mentioned the tax law change in 2016. FIRPTA withholding went from 10 to 15%. Well, not everybody remembers that. So we come across from time to time a party who's thinking, well, it's going to be 10%. Well, no, we have to make sure they fully understand it might not be 10%. If you have a sale of 1.5 million, it's going to be 15%. And really important part to remember. Also, as a seller, and this is where a settlement attorney could come into play and actually become handy prior to contract ratification. If you have a seller who's selling a property for X number of dollars, but they owe a mortgage, a large amount, and they're not really sure what the bottom line is going to be, settlement company can go ahead and kind of give you an estimate of what that bottom line might be. So if you have a mortgage, if you're selling for $1 million, you have a mortgage for $750,000, well, that's not factoring in FIRPTA and other closing costs. So if your overall expenses as part of that settlement, the mortgage, the withholding, all the closing costs exceeds that $1 million, you'd actually have to bring money to the table. So it's important to understand the numbers. It's important to understand that any mortgages need to be paid off, and it's important to understand that withholding does not get reduced in any way, shape, or form if there's not enough proceeds to be dispersed. That's a pitfall that you will come across once or twice a year. I had a closing maybe a month or two ago where a G4 visa holder didn't expect FIRPTA to apply, wasn't aware of it. Once she understood that it did apply, ended up, I think, walking away with about $2,000 as part of settlement because another $88,000 had to be held for the withholding. She didn't expect that. Now, if you're looking to buy a house after you sell this house, it's a really important part of, that's some important information you're going to want to know. It's an important part of it. So reaching out to a settlement attorney as quickly as possible and actually having them provide you with an estimate is not a bad idea. So those are some of the pitfalls, the post-closing pitfalls after you settle. It's the timing. Michigan touched on it. We really don't know. I mean, it could take up to 12 months or so to receive a withholding certificate or to receive a refund from the IRS. So that's something that has to be considered, and really, really everyone needs to look out for. Communication post-closing, and as part of closing. You're going to want to make sure that all of the information that the settlement agent gets from you is not just accurate, but up to date. And all the parties should make sure they're communicating, their agents are communicating, to know that, okay, if we receive a letter or a request for additional information after settlement, while you're waiting for a withholding certificate and nobody replies to that letter, which has happened, then it's just going to take longer, or the application might be rejected in full. So if there's letters going out to an address that you're no longer at, a forwarding address provided at closing that is no longer valid, that can be a major problem, and it has been, as an example. So something to look out for in terms of communicating with the settlement agent and making sure the settlement agent's communicating with you and obtaining all that information. As far as one of the worst pitfalls, I think, is penalties that can be assessed to the buyer as part of the transaction. No buyer is going to want to see penalties for issues with the withholding. They are responsible for the withholding. If they get a bill or a notice for $100,000, they might be a little bit upset and may reach out to the parties and see how that gets resolved. So one of the things you look for in correcting that, and I can give an example here, it was a mistake, but the IRS isn't always great at basically assigning checks to the correct account. So as a settlement agent, we're going to make sure when we send all the money to the IRS, we have records of everything that's been sent, copies of everything that's been sent. We have a FedEx delivery receipt. We have a copy of the check. We've literally gotten letters or calls from buyers who said, I just got this notice for X number of dollars. It says, well, this money wasn't sent to the IRS. So we have to go pull that check, spend the next couple of months getting that resolved. But as long as you have an agent or settlement attorney or settlement agent that has all that information, that keeps good records, it's a good way to alleviate that problem. But it is a pitfall that happens. So anytime FIRPTA is involved, you have to worry about how the IRS is going to process it. So just make sure good records are kept, and I think that's one of the biggest concerns and probably one of the biggest issues. So in closing on this section, I would say, A, make sure you have a great settlement attorney who knows what they're doing, who's experienced, whether it's KVS or otherwise. Make sure you have a CPA like the Wolf Group who's working for you and is also experienced in FIRPTA, because we come across CPAs who are great at their job but might not be well versed in FIRPTA, and that can be a major issue. So if your best friend's a CPA and you love working with them, but they don't know FIRPTA, don't work with them. It's not going to help you in the end. And I think the best advice on how to proceed with the settlement process and obtain a good settlement attorney, I would say, lastly, the buyer gets to choose who the settlement attorney is. However, if you're already talking to someone about FIRPTA, someone being a different settlement attorney, you can certainly advise the buyer to use that settlement attorney, because when FIRPTA is involved, it's in their best interest to do so, in my opinion as well. So something to think about, and that's it. Yeah.
Well, thank you, David. That was very informative. I got actually 2 questions for you when you were talking there. I wrote them down.
All right.
Have you ever worked with a G4 that's then moved outside of the U.S. and used a virtual mailbox as their address on the 8288?
We have not, no.
Yeah.
No. And I think, to be honest with you, if I'm presented with that, I'm going to say, well, let's try to get an actual solid address. Yeah.
Yeah. I get that.
I've seen a lot of people use, friends. I've seen a
Mhm.
lot of people use neighbors like Kara. or a family member, if they have a family
Yeah.
member still in the US. I've seen a lot of
Yeah.
people do that.
That's a common occurrence as far as forwarding addresses goes, and that's a good idea. If you don't have one, I think using a family member or friend is the best way to go. Yeah,
Okay.
as long as it's a stable address, you know,
Right.
and it's going to be viable.
Yeah, that's critical for the correspondence. And then, David, do you see, other than G4s, do you see any diplomats, A1, A2, FJM, any of the other non-resident visas that come in and do any FIRPTA for those folks? Or is this
Yeah.
primarily G4s? Or
Pretty common.
Yeah.
Yeah. I
Okay.
mean,
Cool. All right, moving on. Unless Tracy, do you have any comments?
No, I would just, reiterate, what David said, because, it is important for sellers to know that the buyers do choose the settlement agent, but I think it's really important, for the sellers to, especially if they start working with, somebody like KVS or another settlement agent pre-sale, to sort of, let the buyer know, especially because the buyer could potentially have liability, if they have a choice, especially depending on how the real estate market is, to sort of not make it a condition of the sale, but say, we'd really like it if you'd work with, this agent, because we've seen a lot of times where a settlement agent has either potentially, not ruined it, but if a seller has wanted to use work to do an 8288B, has not let the seller do an 8288B for various reasons, because they wouldn't hold the funds in escrow, or a settlement agent has made it really difficult for the seller. We had one situation where the settlement agent messed up the forms so badly that the funds, instead of ending up in the seller's account at the IRS, ended up in the settlement agent's account. And it took us years to get the money back from the IRS, to get it transferred back to the seller. So, there are some settlement agents who just don't have familiarity with FIRPTA and don't fill out the forms properly. And it can cause a lot of stress and frustration for sellers, because it really ends up being a lot of money, because especially given the home values in the DC area, we're talking about a lot of dollars. So
And I've mentioned to IRS many times, because I'm actually going to see them this Thursday and Friday at the GW conference. And I've told them several times, I'm like, why don't you guys just open up a walk-in clinic for FIRPTA for those 8288Bs, where people can just walk right in? Because in this area, I guarantee you that's where they're getting all their applications from. It. And just for me, it makes common sense.
great.
Okay, so we're going to go through this as part of our presentation here, but there's basically three options, right? There's three doors when you have FIRPTA.
right, yeah.
As part of this, you've got, as David said, you get the B form, you get the A forms, that's option 1 and 2. And then you have this claim a refund form, which we'll talk about here in a minute. But I think we just want to kind of set the table that these are like the three doors that you walk under, that you walk through, excuse me. And then there's various iterations depending on which one you do. There's a lot of different scenarios that can occur when we get into that. So we're going to walk through a couple hypotheticals, and Tracy, I believe I'll let you take this one.
Okay, yeah, and this is a very, very simple example, and there could be a lot of other factors that would go into a transaction, but we just made this very simple to go through this fact pattern. So we have a seller, a single G4 visa holder, who purchased his home for $500,000 on, March 1st of 2015. And we're assuming that he's going to enter into a contract to sell it for $650,000 on January 15th of 2023. And the January date of 2023 is going to be important when he's deciding what he's going to do vis-a-vis filing a tax return to get his refund, or filing an 8288B. And it's also important to know that he never rented the property, and he owned it, and he occupied it as his personal residence for the entire time. And then, just for purposes of this hypothetical, to make it as easy as possible, we're assuming he never did anything to the property to improve it or anything like that. And we're also going to assume he has no settlement charges from when he purchased it or anything else like that that's going to complicate our calculation. We also are going to assume that his buyer has a U.S. taxpayer identification number, a social security number, or an ITIN, and that the buyer is happy to give it to the seller if the seller decides to file a Form 8288B. And we're also going to assume that the buyer engaged KVS title so that
Great
if,
choice.
again, the seller decides to file an 8288B, there aren't going to be any issues with the settlement agent holding the funds in escrow until the IRS issues a withholding certificate. So now, why is it important that we noted that he owned and occupied the property the entire time? Because there's a code section 121 of the Internal Revenue Code, and that says that if a taxpayer owns and occupies a property for 2 of the 5 years immediately prior to a sale, a single taxpayer can exclude up to $250,000 of gain from income. And married people can exclude up to, certain married couples can exclude up to $500,000. Now, if any of you are non-residents who file tax returns, you know that a non-resident cannot file a joint tax return. But if you are jointly own your property and you sell it, you can each exclude up to $250,000 of gain from your individual 1040 NRs. So that becomes very important, this $250,000 exclusion when people are selling property. And it always, we have clients who rent property, and when they're getting ready to sell it, a lot of them always call us to figure out, you know, when if they're still within the 2 years, you know, they say, when can I sell the property? And I still have the $250,000 exclusion. So that always becomes very important if people are thinking about selling it after they've moved out of the property and are renting it. So in any event, how is this Mr. Seller going to calculate his gain? It's pretty straightforward. We've got a $150,000 gain, but because he qualifies for this $250,000 exclusion, his gain is 0. Now note that he does not have a negative gain. He does not have a negative because it's a personal loss. So you never get to take a personal loss against other gains that you have. So it's just 0. So now let's assume that our seller is going to submit a Form 8288B. Now, the form that Michigan showed you earlier looked like it was pretty straightforward, just a quick form that, you know, somebody needs to fill out and sign. It looks fairly straightforward, and it looks like you can just dash it up really quickly and send it to the settlement agent and dash it off to the post office. But there's actually a number of attachments that need to be submitted with the 8288B. You need to basically justify to the IRS that our Mr. Seller would not owe any tax on the transaction. And for every number that we have on there, you need to have backup to explain to the IRS that he owes no tax. So you need to have the settlement statement from the original purchase showing that he bought the property for $500,000. You have to have the sales contract showing that it is $650,000. We're going to get into another quick example showing a situation where he would owe, or assuming, what if we had a situation where it wasn't so straightforward and we needed to show some improvements on the property to get to the point where he would owe 0 tax. We would have to show receipts if he had remodeled his kitchen or put in new flooring. The IRS won't accept a canceled check. They need to see the actual receipt from the contractors. So all of that needs to be sent in to the IRS. There's a bunch of representations that need to be signed under penalties of perjury. the form itself needs to be signed under penalties of perjury. So you can end up sending with this one-page form, sometimes it can end up being, 100 pages, sent to the IRS, depending on how many documents are sent with the Form 8288B to the IRS.
Yeah,
We
Tracy,
recommend,
it always looks like a little book to me every time we
right,
we
exactly.
prepare them and get them stuffed in there. It's like, oh, we need a bigger envelope to put this entire documentation package in there for them.
Right. And so, oh, David, you have something?
Well, I was just gonna note, if I could, in terms
Sure.
of the size of the application, from a settlement standpoint, and going back to the picking a good CPA. I mean, we've had closings where it's a pretty thin application that's being sent right before closing. So, something to look out for as well. And that's why it's always good to have a good CPA.
Yeah, thanks. And so we recommend that it be sent via certified mail, return receipt requested. And most settlement agents do require proof of mailing in order to hold the funds in escrow, because there's liability for them and liability for the buyers if they're going to hold it in escrow rather than remit it to the IRS, the funds. And we also recommend that it be mailed at least 1 day prior to the closing date. When we're doing them, we typically try to get it done, at least a week or so in advance, so that the settlement agent has time to get their closing statement ready and have everything, done, so that all the parties know that it's taken care of. So when an 8288B is filed, the settlement agent, must hold the funds in escrow until receipt of the withholding certificate or a rejection letter, from the IRS. There are some settlement agents who will not hold funds in escrow. So typically when a seller contacts us before we start the process, we typically advise sellers to talk to the settlement agent and make sure that they're willing to hold the funds in escrow that they'll hold the funds in escrow at all, and that they're willing to hold them until the IRS issues the withholding certificate. Pre-COVID, the IRS would issue a withholding certificate within about 90 days, which was typically within the comfort zone of most settlement agents. Now it's taking about 12 months, which, David and I were talking about this earlier this morning, and it's, I think, outside most, settlement agents' comfort zones, to have to hold it that long, but, the IRS, I think, has.
Yeah, I would just add, we do it, and it really is taking 12 months. I'm not sure we've had any closings from 2022 where we've that we're waiting for certificates for that have actually been issued yet. So,
Right.
Anyway.
It seems like, unfortunately, it's taking longer. In last year, they were taking about 10 months to 11 months, and now it's taking longer. So I'm not sure why. So, I'm sorry, I don't know if we finished the other side, but basically we did. Okay. So and then just to note that even if you have zero tax due, you still have to file a tax return. So, and this is the letter that a seller will receive, and it says on the withholding certificate that it doesn't absolve you of the responsibility to file a tax return. So this is, basically the same hypothetical, except the sales price is higher. And again, we're assuming, which isn't quite so realistic, that he didn't make any improvements, isn't going to have any closing costs or anything. So he has a gain of $75,000, and he's going to have federal tax due of $5,200. So in this type of scenario, we're assuming that the IRS is going to agree with the Form 8288B that he's going to owe $5,200. So when he gets the withholding certificate, instead of the settlement agent remitting, the entire amount to him, what's going to happen is the settlement agent is going to send an 8288A of 5,200 to the IRS with, the 8288A and the form 8288, and then they'll give the remaining balance of 77,300 to the seller. And then when the seller files their 2023 1040 NR, they'll attach the 8288A, which will hopefully be stamped by the IRS, showing the $5,200, and then they'll report that $5,200 as a payment made to the IRS. So that if we show a balance due of $5,200 on the return from the sale, and then we'll show a payment of $5,200 on line 25F, then the taxpayer have a balance due of 0, assuming this taxpayer has no other income.
Yeah, this is just a snip, just so everybody knows, this is a snip from the 2022 1040 non-resident tax return. And the IRS is really getting very detailed now. We went from a postcard with like 6 schedules to now we're back to like, back to the full 2 pages almost. But one of the things I'll point out here, which I know Tracy may have some comments on this too, is that this is a special entry for the withholding tax on the 8288A, whereas the resident return does not. So it's always confusing to the IRS. Sometimes when we do have the US person with a non-US person, assuming that FIRPTA did apply in that situation, that went through, and then where would you put the FIRPTA withholding tax? So that creates some problems sometimes when it gets to the IRS for processing.
Okay, I know we're kind of running out of time, Michigan. I don't know if you want to, how you want to handle
Yeah,
it.
I think we just keep it moving. But the main point of this form here is, I think, Tracy, that you were trying to say is you don't really need to match what was presented on the 8288B to the 1040 NR. They're kind of separate train tracks, right? They don't need, it's not like the IRS will go back and say, oh, what would you put on the 8288B? And that's affirmatively with the 1040 NR. So
right, like if you don't have a receipt for your swimming pool, but you have pictures of it and you have a check you wrote to the pool company, if the IRS ever audits you, you can, show all this other evidence. If you didn't have documentation that was sufficient for the 8288B, which has a really high threshold, you can probably come up with other evidence if you were ever audited. So,
right. Okay, so let's go back to the hypothetical we just talked about. So that was 2A. This is 2B. So what happens if Mr. Seller decides not to file the form 8288B? So he's not going to do the B form. He's not going to do option 1. He's going to say, look, David, we're going to go with the A form. We're going to do option 2. So then David's going to complete, as he said, the settlement agent would complete the 8288, the 8288A, the withholding tax check. They're going to send that down to the IRS FedEx so that they can track everything. The IRS on their end, believe it or not, they're going to take all of that. They're going to take the 8288A and they're going to stamp that with this red rubber stamp where it has a bunch of numbers on it. I call that the golden ticket because it's like Willy Wonka. You got to have it to get your money back. They send it back to whatever address you have there, the forwarding address. That's why David is so concerned about, is it a stable address? Yes, it's got to be stable because you got to get the golden ticket. It's got to come back to you. And then what will happen is you give that to us at the Wolf Group or your tax preparer. They're going to attach a copy of that stamped Form 8288A to the tax return, which Mr. Seller is going to be required to file, even if there is no withholding tax. But in this case, there is, so he's going to want to do a claim of refund. Mr. Seller is going to be filing, and I think this is a comment for Tracy here. He's going to be filing that form, that 2023 1040 form, probably in February of 2024. Let's keep in mind that back in the days of the pandemic, you couldn't even file a 1040 NR till like March. The IRS didn't even allow the tax software to work until then. So it was even more delayed back then. They've kind of gotten better where you can now file it in February, but the 1040 NRs tend to be the last ones the IRS releases for e-filing. So now what do we have here, Tracy, when you have someone that
actually he can't even e-file. That's something you may want to mention to the IRS. Why can't you e-file with a 8288 A? They don't allow e-filing with an 8288A attachment.
Okay, so then that's even worse. Now you're in the backlog, and
right, because you have to
that
mail
creates an
it.
additional Yeah, so that then you create an additional timeline there.
Mhm.
But I think I saw someone in one of the questions that when you said it takes 12 months for the IRS to respond to the 8288B request, they said 12 months with a bunch of exclamation points. Well, now imagine you've done the withholding in January of 2023. You file your tax return in February 2024, but you don't get your refund back till 2025. I mean, now you're looking at 24 months to get your money back. So it can be a very, very long cycle time. And we're going to move a little bit faster here because we want to get to these questions. I don't want to go too much over time here, but we have a hypothetical where now we have two sellers, both G4s. They're both going to be subject to FIRPTA. And I think generally speaking, you want to make sure that the withholding tax is split. So you have two forms 8288. And we run into this regularly where they put it all onto one spouse. And then one spouse files with a massive refund. The other spouse has to file and they owe tax. I mean, it's a whole mess. What do you think about that, Tracy and David?
Yeah, I mean, we see that as a problem. We get phone calls about that. Not from something we've done, but from other title companies just asking. Yeah, it's something that you got to be real careful with. We actually have a process where we'll outline it for the IRS in the actual 8288 application, stating that, for argument's sake, it's $100,000 sale, and 50,000 is going to go to 50,000 is going to spouse one, 50,000 to spouse two. Two 8A forms are attached. Yeah, it's an easy way to make a mistake, and I think it's an important factor to make sure that you file both forms.
Yeah, I mean, typically if a client, calls us beforehand, I mean, I'll tell them, make sure your settlement agent gives you two. And when we're doing the return, I like to attach a statement to the return explaining, for each spouse, this is 50% of the withholding, for this property, and the spouse is filing, for the other half of the withholding, and attach, mention the tax ID number for the other spouse to sort of outline it for the IRS. I mean, whenever I have a tax return with FIRPTA withholding, I always like to attach a statement just to explain to the IRS exactly what's going on, because you never know who's going to be processing the return, and they may or may not be familiar with FIRPTA. So I always like to attach some sort of statement of explanation, even when I have a stamped 8288A, because it still can go wrong with the IRS, especially now, because there's been so much turnover at the IRS that I think the more explanation, the better. But it's
absolutely
so difficult. But
so I think we just had someone ask this question. This is the next hypothetical. What happens if Mr. Seller does not have a social security number or an I-10? This is going to take you way, way, way back to, I think this is like the first year I actually started practicing tax law back here in 2004. I do not remember this coming out, but there was informal guidance issued by, there's a document called the FIRPTA Informal Procedures that was issued by the IRS, where they walk you through like how to fill out the W-7. You write in exception 4, even though if you look at the instructions, that's not like something that's part of exception 4. So there's a whole thing that you have to do here if you have someone who needs an I-10. Now, I'm going to warn you, if you're eligible for a social security number, you can't get an I-10. You have to get a social security number. But if you're someone that doesn't have an I-10 and you need an I-10, and you've got this issue where FIRPTA withholding is you've sold something and now you've got to do the FIRPTA, then you definitely need to get the I-10. That's a really, really important part. And I'm always super concerned about people that don't have I-10s, because when that money gets mailed down to the IRS, it goes into a black box. And then when they do get the I-10, we got to find the money. We got to get them to connect it to the I-10 so it's on the master file. I mean, it's a very, very bad situation, and it can take years to get to the final outcome. We had one a couple of years back that it took us about 3 years to fully resolve with the IRS, and that was before the pandemic.
Yeah, they find it. It just takes a really long time.
They can find it.
They will find it. They'll get it, but it just takes a while.
They have to get the keys to the black box and open that up and figure out where it's at. Yeah. But then the worst outcome is that you do get this letter 3794 that says you haven't done something right. They're not going to, stamp. So there's no golden ticket. So you can, I mean, you're going to have all these problems if you don't do it the right way. Okay. Hypothetical number 5, which I'm really not going to talk too much about, but some people, hey, what if I quit claimed it to my U.S. citizen spouse? Being married to a U.S. person does not absolve you of FIRPTA. I think we had a couple questions about that. Quit claiming it is a whole can of worms, especially with the G4, because then you get into the gift and estate rules. You get into whether you're a domiciliary or not. I still think FIRPTA would apply in a quit claim situation. So I just don't see it as something that I personally don't like to even entertain questions related to that. I normally get an attorney to come in and talk to us about that. David, do you get that? Any comments on this one that you want to talk about?
Yeah, we've this question's been presented on multiple occasions, and I take the same stance as you. I don't think it's I think it would apply. I think it's a risky option, and we try to stay away from advising anyone to handle it this way.
Okay, number 6, which is, and again, I think this is an area where it's still a little gray. That's what I'll say about it. But we have the 6013G election, which a lot of people don't even know what that is. They're just like, I file with my U.S. citizen spouse. They don't really understand they're filing under the 6013G election. And I'll tell you that 6013G is a very misunderstood election. A lot of people don't understand the ramifications of that on the tax return. And I see a lot of preparers that don't look at that either, whether it's for the net investment income tax or other areas. So it's definitely an area that if you're filing under, you should learn more about. But in my opinion, when I look at 6013G, and this is a snip from 6013G, it makes you a resident for purposes of Chapter 1 and Chapter 24, and then certain informational reporting sections, 6012, 13, 72, and 91. FIRPTA withholding is clearly in Chapter 3. That's where 1445 lives and dies, which is nowhere on the override section. So in my opinion, it's a horrible outcome. I hate it. I do not like it. But I think that the FIRPTA would still apply. I know some people maybe disagree with that they take a different stance, but I think you have to be real careful with the 6013G election. Comments from that, anybody? Can we move on?
Yeah, unfortunately, I think you're right.
Yeah, I hate being right on that one. That's one I wish I was wrong on. What to do if you don't have to receive the golden ticket? I think, Tracy, you were the one that came up with this. You still send down the tax. I don't let that slow us down on the tax return. We still send down the non-stamped copy, the copy of, like David said, you get all your stuff from the settlement agent, excuse me, and you attach it all, the closing statement,
right?
Stamped 8288A.
Yeah, there's a statement to attach with certain items. One thing I just want to point out on the 8288A is that it's really important to have the buyer's social on it as well.
Correct. Okay. So best practices, we're going to let you guys kind of go through all of this so that we can jump into, I know we're at 2:00, but we'll do about 10 minutes of quick Q&A. I'll leave this up here for the contact information. That's Tracy's contact information, mine and David. But let's go through a couple of these questions. I'll read them out loud, and then Tracy, David, if you want to jump in, or I'll take the question.
Okay.
Okay. The complicated part of the process is that the settlement agent is chosen by the buyer, which reduces flexibility to get a knowledgeable agent. Any suggestions there?
Well, yeah, I think the suggestion would be to, help the buyer understand that any issues with the withholding process will fall on them and can be a problem down the road after settlement. Also, just have the buyer reach out to the settlement attorney, reach out to me, and talk them through the process, why it's so important to have a good settlement attorney handling any FIRPTA case. Yeah.
Okay, next question. Do we need to come up with receipts for capital improvements if the gain does not exceed $250,000? And I'm assuming here that the person believes they qualify for the 121. What do you think, Tracy?
No.
Okay, straightforward and easy. All right, next question. Is the 15% withholding tax rate global? I'm not sure what it means by that, or incremental. So I think the question is it a flat rate or is it a progressive rate? The latter would mean that the property sold for 1.2 million. I think they meant the former. would have a withholding rate of $130,000.
Yeah.
Yeah. So yes, it's a flat rate of 15%
Oh, yeah.
of the sales price. Yes. Yeah.
Yeah.
And then,
Anything over $1 million. Yes.
yeah. And I think that's where David is mentioning that people are shocked when they see the actual amount that has to be withheld, and that it can wreak havoc on your strategy for what you're going to do with the profit from the sale of the home. I mean, if that money is locked up for 12 months, 24 months, I mean, that's a long cycle time from when you sell your home. Now you're technically homeless, or you're moving into an apartment, to when you can use that funds again to buy a home.
Absolutely.
Okay. I'm a G4 visa holder. My wife is a citizen. Could I remove FIRPTA implications by gifting all my interests in our home, which we bought together, ahead of a future sale? I think we talked about this. This is the quitclaim deed that we just went over. That's the one of the ways you can do it. Gifting is, I guess, another way you could do it. But as I indicated, that's not something a path that I would entertain for one of my clients. I think you're asking for trouble on multiple fronts there. I think it solves more problems than it answers.
Well, I think they should consult an estate and gift tax attorney before they do something like that.
Correct. All right. If I don't hear back from the IRS before next tax season, is there a way to communicate a claim through the tax filing? And so I think this person is saying that they may have filed the 8288B. They have not heard back yet from the FIRPTA unit. We're about to get into the 2022 tax return. What do they do?
Yeah, I don't. Well, I mean, I'm not sure how that gets resolved before you receive a withholding certificate. So if they filed this year, like I mentioned earlier, it's likely they won't actually receive any certificate until 2023. So I guess you guys, can speak on whether that applies to their, or when the actual sale will apply in terms of filing their taxes.
Well, because the money's still with the settlement agent, the money's not with the IRS.
Right,
And then,
right.
because I saw a scenario like this, the settlement agent erroneously sent the money early to the IRS because they had a policy of 6 months. I think I mentioned this to you. And then a few months later, the seller got the withholding certificate, and then the settlement agent realized the error and was trying to get it back from the IRS. And obviously that wasn't going to happen. So the seller needed to file a tax return to get the money back. So they did that. And then and then a few months after that, the buyer got a penalty notice because the money was sent after the 20 days, but before, and there was a zero tax due on the sale. So there was, no issue there. But so basically the buyer wasn't, if the settlement agent had just waited for the withholding certificate, there would have been no penalty for the buyer because there was no tax due. And it was a question of, the right hand wasn't talking to the left hand in terms of the FIRPTA department, because nothing's computerized. If the department had been computerized, they would have probably seen, okay, no harm, no foul here. The tax was sent over, but no tax was due on this person, and it would have been all fine. And hopefully everything's gotten resolved, since then. But yeah, I think that you just can't do that. You just have to, in this case, and then in this case, because everything's not computerized at the FIRPTA department, if you have the settlement agent send it in close to the tax return deadline, your tax return is going to be delayed because of the way the FIRPTA department works. Is it's a paper-based department. So they don't even open all of their mail timely, like to check for checks. So it's going to sit there. And I think it's going to be delayed even further. So you may get your withholding certificate back before your tax return is processed.
Yeah, so it's
If that makes sense. So I think you just have to file an extension for your tax return.
you definitely have to file an extension. And it's my understanding that the withholding agent cannot release the funds until they either get the certificate or get the denial letter.
Right.
And if they do, you're playing with fire because they, like you said, the buyer is going to may get that wacky penalty notice that hey, you sent this in 20 days after 20 days. That's really, you got to be real careful with that. And I think that, like you're right, Tracy, you got to file an extension and you're just going to have to play the waiting game until something comes through, and then you can file your tax return to follow up on that. Okay, next questions. And let me read this properly. So if I understand correctly, as a G4, when I sell my property, I pay sales tax, capital gains tax, and then big capital letters, and an additional 10 to 15% due to FIRPTA.
Well, yeah, the one thing I would add though is FIRPTA is not, I think it's almost a misconception, right? It's not necessarily a tax, it's a withholding. So if no taxes are due in the end, that money obviously goes back to you, the seller. But yeah, yeah, I think that's correct. Minus the fact that it's not a tax, it's a withholding. That's a good assumption. Yes.
Right. Okay. So after withholding on a settlement, how does non-resident best claim for a refund if there's no tax obligation? Answer there is, you're filing you're required to file the 1040-NR. You have to file your non-resident return. But again, all the stuff, like we just said, all the stuff kind of has to play out properly with the IRS to make sure that that money is credited to your taxpayer account. Okay, we have one question in here about a G4 that owns a house through an irrevocable trust. Now, we have some folks that own their houses through revocable trusts, and that's one separate path, right? An irrevocable trust is a whole different path. And if you go to those two charts that I set out in the very beginning of the slides, that kind of, the first chart will walk you through what happens if you have an actual trust and how FIRPTA may apply to that one. But that's beyond the purview of this particular presentation. And with that, folks, we are now officially out of time. We're 10 minutes over, so I do apologize for that, but I do think it's been pretty valuable. It's been super insightful to hear from David and Tracy and their insights. And once again, guys, thank you so much for taking the time out of your busy schedules to participate in today's webinar. I hope everyone else found it to be valuable, and we'll see you guys next time.